Welcome to the Monday edition of the Tech Stocks Daily Podcast, where we dive deep into the heart of Silicon Valley and beyond, delivering the freshest updates from the world of tech stocks. Today, we're peeling back the layers on Tesla's headline-grabbing legal settlement and strategic swerve towards a robotaxi future. Google isn't staying quiet either, as we explore their leap in stock value and cutting-edge Android features. Meanwhile, Apple navigates the choppy waters of market performance and socio-political activism, and Microsoft bets big on AI, promising to redefine our digital future. Strap in, it's going to be a thrilling ride through the latest shifts, challenges, and bold moves shaping the tech giants on NASDAQ. Let's jump into the world where innovation meets the stock market and uncover what these developments mean for investors and tech enthusiasts alike. Tesla made headlines today as it encountered various critical moments that spotlight the intricate relationship between its innovative technology and the real-world implications of its deployment. Central to today's news flurry is Tesla's settlement in a wrongful death lawsuit following the tragic crash that killed Apple engineer Walter Huang in 2018. Huang perished when his Tesla Model X, operating on Autopilot, collided with a highway barrier in California. The settlement arrived just as a trial was underway, drawing widespread attention to the safety and efficacy of Tesla's Autopilot system and the company's accountability in ensuring driver safety. Additional scrutiny came from a recent reveal that Tesla is refocusing its business strategy away from the much-anticipated $25,000 electric vehicle, wedging its ambitions instead on developing its robotaxi fleet. This pivot is driven by a vision to dominate in the autonomous vehicle sector, a move that financial analysts are calling thesis-changing for the electric vehicle giant. Such a decision weighs heavily because it signals a potential shift in Tesla's product roadmap and strategic priorities, impacting investor sentiment and the company's market valuation. This report surfaced amidst rumors and Elon Musk's public denials, deepening the intrigue around Tesla's future direction. Adding another layer to Tesla's dynamic day in news, scrutiny continues over the safety of its Autopilot and full self-driving technologies. These systems are under the microscope for how they interpret road conditions and ensure driver engagement, especially after the National Transportation Safety Board's findings on their limitations contributing to accidents. The board pointed to these driver assist technologies providing a false sense of security, with ongoing federal investigations into other Autopilot-related crashes. Parallel to its controversies, Tesla is experiencing notable stock fluctuations. After a slump attributed to skepticism about its shifted focus from the low-cost EV, Tesla's shares rebounded, ostensibly due to investor reevaluation of its strategic realignment towards robotics and autonomous driving technologies. As earnings estimations adjust and regulatory examinations intensify, the electric car giant is navigating through a critical juncture that could redefine its identity and its place in the auto industry. Tesla's current narrative is a complex tapestry of innovation, regulatory challenges, and strategic recalibrations. With safety, technological integrity, and market positioning at stake, Tesla's journey encapsulates the tumultuous path of pioneering in the rapidly evolving realm of electric and autonomous vehicles. The implications of today's news ripple beyond stock performance, influencing the future of transportation safety standards, regulatory practices, and the global push towards electrification and automation in mobility. Today, Google made headlines for several compelling reasons, highlighting its robust efforts and strategic initiatives across different segments of its vast technology empire. First and foremost, Alphabet Inc., Google's parent company, showcased a significant leap in its stock value despite overall market dips, emphasizing Google's resilient and growing market position. This uptrend is attributed to the anticipation surrounding Alphabet Inc.'s upcoming earnings report, with projected increases in EPS and revenue. This positive shift not only underscores Google's financial health, but also reflects broader confidence in its innovative and strategic capabilities within the tech industry. In another key development, Google leveled up the Android user experience by rolling out its new Find My Device feature. This feature is Google's answer to Apple's Find My network, helping users track and locate their lost Android devices using the power of the massive Android ecosystem. This launch marks a significant enhancement in Google's device ecosystem, enhancing security and peace of mind for Android users across the globe. Furthermore, Google's ambitious expansion into artificial intelligence is gaining momentum. The integration of its Gemini AI into the Google app on Android devices exemplifies the company's strategy to integrate advanced AI solutions seamlessly into everyday technologies, enhancing user interactions and capabilities within its ecosystem. Additionally, Google is actively extending its cloud capabilities through strategic partnerships and product launches, such as the live launch of VVDN's intelligent cloud engine on Google Cloud Marketplace. This move signifies Google's commitment to fostering innovative cloud solutions and services geared towards a future-ready tech landscape focused on IoT, AI, and cloud computing. Collectively, these news items exemplify Google's aggressive pursuit of innovation, strategic growth, and its aim to reinforce and expand its market leadership in the technology sector. From financial achievements and strategic partnerships to groundbreaking feature releases and AI integrations, Google continues to shape the tech industry's future, impacting users and businesses worldwide. Apple found itself at the center of several news stories today, each offering a different facet of the tech giant's current affairs and future prospects. Firstly, the trading session left Apple with a modest decline of 0.67%, closing at $168.45. This slight drop lagged behind the general market's performance, hinting at pressures that might be specific to Apple or possibly the tech sector. The upswing for analysts and investors now lies in anticipation of Apple's upcoming earnings release, where expectations set a cautious tone with a predicted year-over-year decline in earnings and revenue. In a shift towards corporate practices and social responsibility, Apple's Lincoln Park store in Chicago closed early, triggered by protesters chanting "Free, Free Palestine" slogans. This protest sheds light on wider systemic and socio-political issues, enveloping Apple in a discussion far beyond its technological output. Here, the focus isn't just on product innovation, but on corporate values and ethical standings, reflecting growing expectations from global corporations to navigate and address political activism within and outside their workforce. Furthermore, Apple's ongoing rivalry with Spotify over music streaming services got a new chapter, with the European Union imposing a hefty fine on Apple, propelling changes that favor Spotify. This situation underscores the competitive dynamics in the music streaming industry and regulatory challenges. It also raises questions about Apple's approach to employing AI in its services compared to Spotify, which is leveraging AI in creative and customer-centric ways. Lastly, with eyes on Apple's future, the company continues to ignite interest through investments in emerging tech landscapes. The Vision Pro headset and the anticipation around the iPhone 16 signal Apple's ambitious ventures into immersive content and next-gen hardware advancements. Today's stories encapsulate a multidimensional view of Apple, facing challenges in the market, navigating geopolitical and regulatory complexities, and innovating for future growth. Each of these aspects combines to keep Apple in the limelight, underscoring its significant imprint on the tech sphere and beyond. All right, let's wrap this up. Microsoft made headlines today from different angles, showcasing both its financial maneuvers and its ambitious strides in artificial intelligence. Firstly, we saw Microsoft stock take a slightly steeper dip compared to the broader market, which has raised a few eyebrows. The details surrounding their financial health, including projections for earnings per share and revenue, were dissected with an anticipation building around their upcoming financial results. With the tech giant's earnings per share expected to see a significant year-over-year increase, it's definitely a space to watch. Switching gears, Microsoft's AI developments took center stage, thanks to Mustafa Suleyman's big move to open an AI hub in London. This strategic expansion not only underscores Microsoft's deep dive into AI, but also highlights its partnership with pivotal players like OpenAI. It's a testament to Microsoft's belief in AI's transformational potential across various product lines, including Azure, GitHub, Office, and Bing, among others. The new hub aims to leverage the UK's rich AI talent and will focus on advancing language models amidst collaborative efforts with global AI teams. Furthermore, the tech race in artificial intelligence is heating up, with Microsoft being touted as a frontrunner, especially in AI software, courtesy of its collaboration with OpenAI. Its ability to integrate AI technologies across multiple platforms signifies a monumental shift in how tech will shape our future. So, what do you think about Microsoft's dual focus on stabilizing its financial trajectory while aggressively pursuing AI innovations? Do you believe these strategies will fortify Microsoft's position, not just in the tech market, but as a leader in AI advancement? Drop your thoughts, opinions, and predictions in the comments below. I'm eager to hear what you think about where Microsoft is headed and its impact on the future of technology. Today's market sentiment displayed a diverse tapestry of anticipation, skepticism, and strategic recalibration among tech giants on the NASDAQ, demonstrating the sector's dynamic nature and its susceptibility to shifts in innovation, regulatory landscapes, and global socio-political movements. Starting with Tesla, the mood was a complex mix of concerns and reassurance. The settlement in a high-profile wrongful death lawsuit and the ongoing scrutiny over its Autopilot and full self-driving technologies introduced an air of caution. However, Tesla's strategic pivot towards developing a Robotaxi fleet, despite causing initial skepticism due to a departure from its budget EV ambitions, eventually led to a rebound in its stock value. This suggests an underlying optimism, or at least a speculative interest among investors regarding Tesla's long-term vision for autonomous mobility. Google, under Alphabet Inc., radiated strength and optimism in the marketplace, as evidenced by a significant leap in its stock value. The anticipation around Alphabet's upcoming earnings report, combined with strategic expansions in Android's functionalities, AI integrations, and cloud capabilities, signaled confidence in Google's ongoing innovation and strategic growth endeavors. The tech giant's efforts reflect a robust posture aiming to further solidify its leadership in the tech industry. Conversely, Apple's environment seemed mixed, with a slight decline in stock performance and looming concerns over its upcoming earnings, indicating potential vulnerabilities. However, the company continued to demonstrate resilience through its innovations and investments in emerging tech, navigating geopolitical sensitivities and competitive dynamics with finesse. The spotlight on Apple amidst protests and regulatory fines showcased its pivotal role in not just technology but broader societal contexts. Microsoft's narrative was focused on anticipation and ambitious forward momentum, especially around artificial intelligence. Despite a slight dip in stock performance, the excitement about Microsoft's AI adventures and its financial outlook points to a vigorous engagement with both its immediate financial performance and its long-term strategic investments, particularly in AI. The establishment of an AI hub in London accentuated Microsoft's efforts to forefront the AI revolution, pairing cautious financial reviews with enthusiastic projections of AI's future role. In summary, the overall market sentiment today was a mix of cautious optimism, strategic pivots, and resilient forward-looking initiatives. Companies like Tesla faced investor skepticism amidst reassurance through strategic shifts. Google garnered optimism through growth and innovation. Apple navigated slight pessimism with an eye on future tech evolutions, and Microsoft blended financial caution with AI-driven enthusiasm. Thus, the day reflected a wide spectrum of responses to the challenges and opportunities presented by the current technological and socio-economic landscape. Analyzing today's flood of tech news, if I had to focus on one stock to contemplate a sell, buy, or hold strategy, it's Tesla. The mix of today's developments paints a picture loaded with opportunities, but not without its significant risks. Given the current circumstances, my stance would be to hold on Tesla's stock. Now let's dive into why. Firstly, Tesla's settlement in the wrongful death lawsuit could initially be viewed as a bearish signal, emphasizing ongoing concerns about the safety and reliability of its Autopilot and full self-driving systems. Such news might trigger worry among investors about potential future liabilities or stricter regulatory scrutiny. However, settlements are not uncommon in corporate America and can sometimes serve to remove an overhang on a company's stock by resolving long-standing issues, potentially clearing the path towards smoother operational focus. The pivot away from the introduction of a $25,000 electric vehicle to a more pronounced emphasis on developing a robotaxi fleet is quite the strategic swerve. It's a classic Elon Musk move, big, bold, and brimming with future-centric vision. For investors, this recalibration signals Tesla's ambition to spearhead the autonomous driving frontier, a market with staggering growth potential. While some might argue this shift puts at risk Tesla's appeal to the mass market, the bet on autonomous mobility solutions and services could open long-term revenue streams far beyond the sale of individual vehicles. Despite today's initial negative stock reaction, attributed to skepticism surrounding Tesla's revised focus, it's notable that the shares rebounded. This demonstrates underlying investor confidence, or at least curiosity in Tesla's long-term narrative, and Musk's capability to steer the company into new territories of innovation and profitability. The reports also underscore the enhanced scrutiny over Tesla's driver assist technologies, posing challenges and possibly stringent oversight ahead. Nevertheless, Tesla has historically navigated regulatory hurdles and remained at the cutting edge of vehicle technology innovation, suggesting a capacity to weather and evolve through such scrutiny. In an environment characterized by regulatory challenges, strategic shifts, and market fluctuations, holding Tesla shares appears to be a reasoned stance. This strategy advocates for a watchful waiting approach, allowing investors to reassess as Tesla further iterates on its Autopilot technology, provides more clarity on its robotaxi ambitions, and navigates the legal and regulatory landscape. Remember, this analysis is predicated on today's news fire hose, and the situation around Tesla, like any company, can evolve rapidly. Always do your own due diligence and research when considering any stock trades. Investments should align with your risk tolerance, financial goals, and the broader market understanding. In today's whirlwind of tech market activity, we voyage through Tesla's legal settlements and strategy shifts, Google's resilience and innovation in AI and Android features, Apple's blend of market challenges and future tech excitement, as well as Microsoft's AI ambitions amidst financial anticipations. As NASDAQ's tech titans navigated strategic pivots, regulatory landscapes, and economic signals, the market closed with a mosaic of cautious optimism and speculative intrigue. Reflecting on these dynamics offers invaluable insights into the evolving tech ecosystem and its potential pathways. For more tech news analysis in this digital age of rapid innovation and shifting market sentiments, remember to tune in daily. Share your thoughts and engage with a community equally passionate about the intersection of technology, business, and society.